with you today. Grateful for the opportunity to have our guests, Jay and Mara Shorr, two of my dearest friends and colleagues who I've worked with for, oh my gosh, it feels like years. And they certainly,
It has been.
yeah, it has been, and they do feel like family. We've gotten to know each other and families well throughout the years, but two people who I have the utmost respect for, and excited to welcome them in today. Just kind of setting the the ground rules and kind of the way that we work things, and the way that our webinar goes. Many of you have been here before, been able to see our webinars. We and if this is your first time coming in, we welcome you as well. But what we're going to do for our format is I'm going to introduce Jay and Mara in just a minute, and allow them to give their presentation and talk to us today about how to really maximize your practice, and thinking about the future, right? And potentially how to get it ready if you're going to sell it and down the road, and what that might consist of. As you have questions, we have our control panel, the Q&A section on there, and so go ahead and post any questions on there. I'll moderate those. I am going to save those until the end. So when we get to the end, I will give those to Jay and Mara at that time, and let them answer those questions that you have for them. But let me give just a little introduction to both Jay and Mara. And I was joking with them. They have such amazing credentials that I actually scaled them back a little bit. They're like, we're only 80% as effective. I'm like, well, once they hear you though, it'll be solidified. So it's good.
Wanted to save time for the webinar.
That's right. Well, I'll start with ladies first. Mara Shorr is the Vice President of Marketing and Business Development at Shorr Solutions. And of course, the better looking half as well. No offense, Jay.
It's the hair. I have more hair, Jay. Sorry.
There we go. But Mara's a partner of Shorr Solutions, and she brings more than a decade of marketing and communications experience to the Shorr Solutions clients. She is a level 2 through the Certified Aesthetic Consultant program, utilizing her knowledge and skills from her previous positions in marketing for 2 separate leading dermatology, cosmetic, and plastic surgery practices located in South Florida. She's no stranger to the startup world. Mara founded and ran the Leone Company, a marketing and communication relations firm based in Orlando, until she joined Shorr Solutions in 2012. And Jay Shorr is the founding partner of Shorr Solutions. He is formerly known as the Best Medical Business Solutions, and it's a Florida-based medical practice consulting firm assisting practices with their operational, administrative, and financial health. Jay served as the Vice President of Operations and Practice Administrator for a leading board-certified dermatologist, and for a cosmetic surgeon in South Florida until her passing in June of 2012. He's also held partnerships in 2 other leading South Florida plastic surgery centers in the past. So I think what I really love about Jay and Mara is both of them have hands-on experience of working in the practices. They both have immense marketing experience, and they absolutely know what they're talking about. So you're in for a treat today. I'm going to turn off my camera and let the 2 of you take it from here. So thanks again.
Thank you.
Awesome. Well, we are so incredibly excited to speak with you today about, quite honestly, a topic that we are hearing more and more and more people ask. I think we have 1 to 2 meetings about this today alone with potential new clients, and clients themselves are asking. In a COVID era, we're getting the question more and more, how much is my practice worth? So that is something we continue to get asked, and there's not a short, easy answer, which is why we're going to go over that in the next 40-ish minutes or so. And there's a couple key points that we're going to go over, and then I'm going to let Jay kind of hit the ground running with this. But we are going to make sure we're reviewing what information is needed. So when you're gathering information ahead of time, what information is needed for a proper valuation, not just a guess, but an actual proper valuation. We're going to discuss getting the proper assistance to make sure that this is effective, you're getting an effective valuation, and then really talking about when the right time to get that valuation on your practice is. So we get this question all the time. Do I get this when I'm ready to sell? A year, 3 years, 5 years? What does that look like? Who's in charge of getting it? The buyer, the seller, all that good stuff. So we are going to hit the ground running. And Jay, do you want to kick us off with one of your all-time favorite sayings, blurbs, whatever we want to call this, to talk? Let's kick it off. Let's get started. And for those of you that don't know, that Jay is actually my father. So we are a father-daughter team, in case you missed that. So I always love getting to present with my pops. So Jay, why don't you go ahead and kick us off with one of your favorites?
Thank you. This is one of my favorites because this is a leading slide in just about every presentation I do, because one of the most important things that we have to know is what medicine is. I know today we're going to be speaking on when is the right time to sell my business, what is the value of my business, but we have to understand what it is. So medicine's a science, whether it's on the wellness side, whether it's on the aesthetic cosmetic side, and it's a way to heal the sick and injured. I come from an emergency trauma background. And then I got into the aesthetics later on down in the years. In my corporate world, I spent a whole lot of time in safety, health, security, and that's what led me to this. So medicine is a way to keep our patients looking young and beautiful. Of course, dermatology, aesthetic, cosmetic, plastic gynecology, regenerative medicine, health and wellness from the inside, from the outside. But medicine is one of the most respected professions today. And they say, well, why? You know, people say, well, a lawyer, an accountant, a doctor. Yeah, they are leading professions. But one of the reasons it's one of the most respected professions today is because the amount of education that really goes into and that's required. You have to go through your 4 years of traditional post-high school, your undergraduate work, and then you go to a 4-year medical school. You earn your medical degree from medical school, but are you really ready to practice medicine? Well, legally, yes, within the state that or states that you are licensed in. However, in our world, our people go back for more of a specialty. Even if you're outside and you go into the ENT, the otolaryngology, then you go in and you take another one and you say, well, I want to be a facial reconstructive plastic surgeon, which hence is why you hear most ENTs or facial plastics come up with, I am dual board certified. They're dual board certified in ENT, then they're certified in facial reconstructive plastics. And there are so many, all right, have different levels. You can go through your traditional, like a 5-year surgical residency, and sometimes they have combined residencies, and then maybe a fellowship for even more advanced training. So when you come up with this, he or she may have gone through 4 years of med school, 4 years of college, which is 8, a 1 or a 2-year internship, a 5-year residency. You may have gone through 10 to 15 years of school, and now you're in your early, mid, late 30s if you've gone on for additional fellowships. And I call it, then you go out and get a job. Now, ladies and gentlemen, hold on. A residency is a job. You're just not making any money. I mean, real money. Because I've seen, unfortunately, residents that really get taken advantage of, all right? But it's like a legal assistant or a law clerk. You know, they graduated law school, but now they're clerking for an attorney or a judge to get most of their experience. So, but never lose sight of the fact, that's why we're here. Medicine is a business. And we have to treat medicine like the business it is, or go work for somebody as a leading physician, as a clinical or academia,
as a medical director,
or as an associate, and don't worry about opening up your practice. Now, Chad stated in our intro, I had a leading aesthetic, cosmetic, plastic surgery practice here in South Florida for many, many years. My late wife was the medical director. And the interesting thing about it is, when is it time to sell and how much is the practice worth? Well, we're going to get into that, because what is the practice worth yesterday, today, or tomorrow? And they're not the same.
Well, and this is actually, Jay, this is a great point. It's like you knew where we were going with these slides, like you've seen them before.
I've done this once or twice.
Like we've had this conversation once or twice. One of the questions and one of the things that we get over and over again is, do I really need a evaluation of a practice? And we get this from people of all ages. So we know that every doctor that plans to own a practice needs to know at some point what their practice is worth. And so if you are not opening up a location from scratch, and we have practices, quite honestly, we have doctors that come to us right out, they've completed residencies, internships, fellowships, and they come to us and they're going to open up a location completely from scratch. Maybe that sometimes they're even building out the facility themselves from the ground up, but often they'll move into another location, spruce it up and get going. But what we're seeing a lot of, in especially a time of COVID, and the reason that this is happening more and more, is that somebody that's looking to buy a practice is going to buy, instead of opening it from scratch, they're going to purchase it from somebody that's looking to sell. And so whether you are looking to buy a practice from another provider, of which we are working with clients to do this right now, whether you are the actual seller. And so they always say, ladies and gentlemen, turn off your phones. So whether you are the seller because you were planning on retiring anyway, it could have been you were going to retire in the next 1, 3, 5 years. And due to COVID, you said, you know what, I really don't want to do this anymore. The opening, the closing, state regulations, county regulations, all of the changes from the CDC, et cetera. It's just too much. I'm ready to start thinking about this now. Maybe you're looking to partner, and we have practices now that are joining, they're combining, and they're partnering. And so you need to know what the value of the practice you are either buying 100% of, or selling is worth. And so that's where we really take the time now to talk about these particular steps. It's so important.
Let me try and explain. I never thought that a good percentage of our client base was going to be in the opening and or selling. It's a really strange phenomenon. But let me give you an example. Because we work either on the buyer's side or the starting of a new practice side, usually comes from referral. We've had a few from our Instagram posts and things like that. But the majority of our business is working intra, when you've already had a business and people want a little bit more assistance and guidance. But we work with starting a practice. We work with exit strategy and succession planning. And I want to get to evaluation versus valuation, Mara, in a minute, because they're totally different. And what was interesting is we starting up from the Northeast, I'm working on somebody to sell a business in the New England area. We have one in Northern Virginia that we're in the process of doing a valuation, but it turned into an evaluation. We have one just to do an evaluation in the Boston area. We have a plastic surgery practice that's looking to sell their operating room, their business, and property. So it comes in South Florida, very, very different. We just concluded, within the year, opening one in Houston, and we looked for the purchase of a practice in Houston. And now we have another one that's selling a practice in Houston. So it's so strange. And we're opening one in Bestly, West Virginia, which is a new spa. So never did I think at one time, I forgot, and another one in the McKinney, Texas area that is starting from scratch, coming out of residency. But I never thought that it would be this much at any one given time. And, COVID was a weird situation because it wasn't a great time to open a new business, except that if you get into the tail end of it, it's a great time to open because you've weathered through it. So let's get after evaluation versus valuation.
Mm-hmm.
Before you put a valuation by definition on your practice, valuation is the dollars and cents. What is the practice worth? Evaluation is let's find out about your practice and evaluate it before we can make a determination on a valuation. And a lot of times we do a lot of evaluations of practices for strengths, opportunities, weaknesses, and threats, or the strategy of SWOT: strength, weakness, opportunity, and threat. Because we want to know where do we improve, because it's best if you're thinking about selling your business or what is the value of my business, why don't we up the game a little bit? Because what's the purpose of wanting to know what your business is worth? It's usually to sell it. Right, Mar?
Absolutely. And one of the things I wanted to go through, because this is a question we get asked a lot of, and therefore we wanted to make sure to really touch on this, is what components and what information is needed to determine a proper valuation. So we really collect, and it's really needed for you as the buyer or seller to collect a heck of a lot of information. So I am going to pull up this handy dandy screen slide here. And there are components, really, we want to know the data. And so we know that opinion and really we have that opinion, and then we have the facts, right? So often, and I think we can all look at this and be completely honest here. So often the seller thinks that a practice is worth more than it's worth, and the buyer thinks it's worth less than it's worth. And so it's truly running this by the numbers like you would run anything else in your business. You want to run the business by the numbers. So these are the particular items to make sure you are pulling together. And there's reasons for this as well. Jay, do you want to go through some of these items? And do you want me to keep the slide up, Jay, as so that people can see these items?
Yes, because I'll go top to bottom, top left to right, bottom left to right. I mean, we've done.
Oh, you aren't going clockwise?
No, I can.
It's up to you.
Really can.
Go on ahead.
I really can. Anybody that knows me knows that I'll go in any order, but I'll just throw it up there. We'll figure it out. But the first thing I ask for are the past 3 years of your tax, your 1040, if it's personal, if you're in a business, an 1120S, if you're a sub-S corporation, and we can get into what type of a corporation you are. Are you a sole proprietor? Are you a professional limited liability company? And then, of course, governs, that's the way that you set your company up through the Secretary of State or Department of State in your state. And then how are you taxed? Are you taxed as a C Corp? Are you taxed as an S Corp with a K1 pass-through of distribution? If you're an LLC, are you a single member? Are you a dual or tri-member or more? Because a single member LLC is considered by IRS governance as a disregarded entity and therefore really doesn't have to file a tax return. But if you are a LLC with a subchapter S election, for tax purposes, the sub S does have to file it. And then the K1 that comes off of distribution then gets passed on to the shareholders. Example, Mara and I are partners, equal 50-50 partners. Didn't start out that way.
It started out that Jay worked for me. I let him work his way up.
It's been a long haul. So what happened was when we started the company, it was just me. And then I went to the sub-S. And when we brought Mara in, it was 90%, 10%, then 60-40, then 50-50. So, but what happens is at the end of the year, the accountant does the K1 for the distribution of profits. And if the profit was high, then I got taxed more of the profit. If there was any loss, then it was shared. However, you put on the K1 of the percentage of distributions of the business. But what I want to caution you about between the P&L and your IRS taxes. I go by IRS taxes in what did you generate in your revenues. Many times your P&L and your tax statement for revenue purposes will marry, meaning they're probably very, very close. However, the net profit or your P&L and your net profit on your P&L versus your taxes may not be identical. And the reason for that is we look at EBITDA. You've heard it as EBITDA, you've heard it as EBITDA. It means earnings before interest, taxes, and depreciation. And many times on your P&L, you're not showing depreciation, but yet on your tax report, you are. And we can get into that later, but this all matters because as a buyer, I want to know how much profit or how much revenue did you bring in and how much was paid out, including shareholder earnings. So as a potential buyer, what could I expect to earn relative to my investment in buying the business?
Now, there's certain things, Jay, that we always talk about with people that are looking to sell their practice or people that are looking to buy a practice that is up for sale. There's certain things as owners of a practice, as owners of a business, that you may write off legally. It's perfectly within the legal scope. It could be for entertainment, although I feel like we're all doing a heck of a lot less of that right now than we used to. So, are they typically concert tickets that you take prospects to? Is it car insurance for the family members that you have working for your practice, and you have 6 kids, they're all working in your practice and they're all getting company cars, things like that, right? So do you have extremely high healthcare payments? Different things to look at that would be an exception to you as the current owner, or would be an exception to the current owner if it's not you, if that's just the seller and you're the buyer. And so you want to look at what are some of those anomalies. And so as you are combing through that P&L statement, as you are combing through all of the line items and the breakdowns, that's when you want to make sure you're asking those questions and really paying attention to detail. We've caught some pretty funky things in the past as we've done this, and that we say, can you explain to me why there is $100,000 in health insurance for the owner at this point? And it's because, look, we need to know, is that $100,000 that would go back in the pocket of the new doctor when they become the owner, or is there something a little funny here? So we need to look at that. Jay, I didn't mean to interject, but I did. Let's keep going. Let's keep going on what else we want to look for.
Yeah, what's very important about this is many of these are very legitimate expenses and deductions. Some of them are very questionable. There are clear, concise, consistent, carved out federal IRS guidelines of entertainment rules and what you can and what you can't. There are very clear and cut automobile expenses, whether or not you're logging for mileage, versus the business is paying the entire car. And some we look at and I say, wow, it's a pretty high expensive car payment, $8,000, $9,000 a month. Now, I'm not here to judge. I'm just saying that as a forensic auditor, I would look at certain things. Now, I am a forensic auditor. I look at things that stick out like a sore thumb. And, when you're talking about maybe $100,000 in health insurance, I think maybe it could be $100,000 of life insurance, as we have seen for an older partner or whatever. But when we look at certain things, I say, let me see the backup, because these are things that could be deducted. For example, you have seasons tickets to the arena for a sporting event and or concerts. Now, you could say you bring patient prospects, you bring this, you bring that. And I'm not here to judge. I read a very interesting article today that is being brought out by what a lot of these medical, pharmaceutical, laser companies are doing, and they're spending inordinate amount of money entertaining people that have no relevance to the project that they're promoting. Example, we go to all these conferences And they have these beautiful dinners and these beautiful things, and they're inviting guests who are not the doctors. They might be employees of the practice. I'll admit it, I've been there. I've been invited, I go. However, there are strict guidelines now that are going to be coming out against this. So one of my other examples is be honest with the buyer and saying, well, the arena tickets that were $10, $15, $20,000. Yes, we did take the patient of the month. Yes, we did have contests. Okay, I buy into that, but I don't want that if I'm the buyer. So it's okay, we'll back that expense back in, all right, so that this would be what the actual earnings would be. So now I want to know about your current staff. What could I expect of what are they earning? And I'm going to give you a perfect example. We're evaluating a practice in the northeastern part of the country, and there are nurse practitioners, physician's assistants. I've also heard them referred to as mid-level practitioners. Some people don't like that term. I'm just sharing what I've heard and what they may be commonly referred to. And they're making $250,000 and $300,000. No, I've heard, well, I've also seen this where $250,000 for a nurse practitioner in the West Coast. And they said, but that's the going rate. And if you produce that kind of money, then you should be well positioned to earn that. They've been there with me 5 years, 10 years, or whatever. As a buyer, I might be saying, do I want to pay $250,000 or $300,000 to a staff member that's not a physician? I'm not here to judge. I'm just saying, can a lower wage earner production practitioner be utilized and not having to pay?
Well, and one of the things that we sometimes see, and look, we are a family owned and operated business ourselves. We literally are. You're looking at the owners of Shorr Solutions, and they are Mara and Jay Shorr. We have an amazing team that works with us, but we are family owned and operated. So understand that when I talk about if there are members of the family that are employed with the practice that is up for sale, you want to look at, do those members of the family plan on staying with the practice, or do they plan on staying at the practice with at their current pay rate? Often we pay family a little bit more because we can. But do those team members plan on staying with the sale? So I know that
even non-family,
even non-family members, would they plan on staying with the practice once the practice is sold? So you want to look at all of those different components when it comes to looking at the team that is currently in place. You also want to look at what is their effectiveness inside the practice. How effective are they in their role? Are they team members that you want to keep? From time to time, we've seen, well, look, we've had incredible drama with that person. We've had theft with that person, and we just don't know how to get rid of them. And so you go, well, this is an easy way. New ownership, we're not keeping these positions. So we want to take a look at how are we planning on moving forward with the current team that's in place. We also want to look at active charts. So by active charts, I don't mean how many people have you ever treated, or has the seller treated in the 35 years that they have been in practice. That's not what I'm asking. Patients move, patients go to other providers, patients pass away, pick a reason that patient, just because they have a chart on your shelf, because if they've been around 35 years, every once in a while, we still see paper charts on the shelf. Just because they have a name in your EMR does not mean that patient is going to come back to the practice. So Jay, how much would you say, we get this question a lot, how much is a chart worth? And how do you determine what an active chart is with? Because people say, oh, I have 30,000 names in my database. That has to be worth so much money. And your response, Jay, you always have this great response for this.
That's a great question, because it's different if you are a medical spa. It's different if you are a dermatologist. It's different if you're a plastic surgeon. Mm-hmm. Example, if you are a plastic surgeon, you may have a one-hit wonder. And that means that you come into town and you may have the young female that comes in for her primary breast augmentation, and you may not see that woman again for many years. Now, if you have a med spa, now I'm just speaking about the plastic surgeon that does not have a med spa component to it, okay? Now, if that's the case, or you may have a mature aged practice and the person comes in after they've had their children and they come in and maybe they want a liposuction or a tummy tuck, or they want to get rid of the mommy baby fat. And then you may not see, or then they come in for a facelift. So what is the average value of that patient? Now, if you are a dermatologist, for example, and you see 50, 75, 100 patients a day, then I want to know is what is the real lifetime value of that patient active? And if they haven't been back in 2 and 3 years, don't count them, all right? Because they're not an active patient. They can come back, but then an active patient can refer. So there is software that can value how much revenue has that patient. And if you have sophisticated software, it can also say how many referrals that patient has done as well.
What I will say is that if you are actively looking to bring up the value of your practice, getting a campaign in place where you have a strong way of bringing patients back, both patients that are currently undergoing treatments, in other words, they want their neuromodulators every 3 months, make sure that they're coming back for their neuromodulators every 3 months. If there's a filler that's every 6 months to a year for another injectable, make sure that you keep them on the schedule. If they've come in for a surgery, make sure you're bringing them back for follow-ups. And if they haven't been back, look at getting them onto the schedule and bringing them back. Because if you are looking to sell your practice, that is a great way to, in the next 6 months, put that system in place, and then you're going to have more active charts, and you'll really know, are they truly inactive charts or charts, or they just you haven't utilized the full potential. Because,
let me make another strong comment about an active patient chart. It depends if you are selling your practice. All right. Now, the part of the valuation is probably to sell. Now, are you staying on once you sell the practice? If you're not staying on, you're going to sell and depart. The list of active patient charts are probably not worth anything. It's called goodwill. And I always make a joke about it, is goodwill is where you donate old clothing and furniture. Because goodwill, if the doctor is not there, isn't going to be worth very much. And I use this example all the time. When COVID was not around, my wife would go to the hairdresser and she would get her hair colored. She would go to the mani-pedicurist at the salon, whatever. Now, let's say that hairdresser that she's been going to for years, or mani-pedicurist, leaves Mara's salon and goes to Jay's salon. Is that client/patient going to stay with the original, or are they following the technician/practitioner? Example, your PA, your NP, your doctor that leaves and goes somewhere else and the patients follow. All right, so if you leave, unless you bring on your heir apparent, meaning you're going to retire, you're going to sell, you bring on the buyer, you stay on for a little bit of time. During the course of that transition, you indoctrinate, introduce your patient base to that new practitioner. Then that active patient chart has more value.
Yes, and the trick, right, if you will, is to have the previous provider, the seller, if you will, credential the new provider. So you are absolutely going to love so-and-so. I handpicked them to buy this practice. I handpicked them myself because of how absolutely amazing their results were, how much patients love them. And I've watched them in surgery. I've watched them inject. They've actually done my neurotoxin, etc. So you want to make sure something like that transition period. Now, we also want to make sure that when you have this transition period, and then we're going to move on to the rest of the analytics together, you want to make sure during this transition period, you don't overstay your welcome, right? I say it's the holidays, and as children, right? So we not necessarily as much during COVID, but think back, right? As we are somebody's grown child and we go back to visit our parents over the holidays. I go back and my husband and I stay in his childhood bedroom when we go back for the holidays. And when we are in that house, they're still in charge. Right? So we are back and that parent is still in charge. You want to make sure that you are giving the new owner the chance to blossom, the chance to really bloom and make it their own. And you're not necessarily saying that they need to stick by the old ways. You want to make sure, and also we want to make sure that the previous owner, we find that often there's a frustration level. Well, the new person does it differently and I don't like it. So we want to make sure we're keeping those things in mind too. You also want to make sure that you're gathering, in addition to all of this other information that we've gone through, marketing analytics as well. You want it because your marketing is worth something. So if you are with Advice Media, then I always encourage you, they do a really, really great job of providing analytics. So look at Google Analytics, look at tools that they have access to like SEMrush. And I would encourage you, if this is something you're interested in, let your website company know that you are looking to build this site up because you want it to have a value. And ask your website company, ask Advice to help you put a value to the website. The best way to do that is lead generation of quality leads and to not just rank for the name of the doctor. So we want to make sure that we're not just ranking for, Dr. Joe Smith, Dr. Jane Smith, because once Dr. Joe or Dr. Jane is no longer with the practice, people aren't necessarily going to be Googling anymore. So we want to make sure we have that we're accessing, because your website is an asset. There's dollar signs attached to it. So the other part is capital equipment. Capital equipment, Jay and I say this all the time. When you buy a car, when you buy a computer, your iPhone, right? Or Android, whatever brand, right? We just happen to be iPhone folks. So when you have this piece of equipment, you buy it, and immediately once you buy it, it depreciates in value. I bought a car last weekend. As soon as I buy, it depreciates the second I drive it off the lot. That's what happens. The same thing happens with capital equipment. And so just because you purchased a piece of equipment at $100,000, $125,000, $175,000, that doesn't mean that that's what it's worth 5 years later. In fact, I can almost guarantee you that that's not what it's worth 5 years later. So we will often go and pull comps, just like if you're buying a house, just like if you're buying a car, you pull comps as to what it is that piece of equipment is worth, and is there anything that you owe on it. So just because you have these pieces of equipment, also what is it that they're currently generating in terms of revenue? So if you have 5 lasers sitting in the laser graveyard collecting dust, they're not going to do you much good in that asset sale, because that's what we end up looking at, is an asset sale. And finally, before we move on from this list, but we felt this was really important to go over, Jay, can you talk a little bit more, because you're the one that truly deals so much on the real estate end. I mean, so much on the real estate end. Talk about when somebody either owns a piece of property versus when someone leases, and then what happens if somebody is stuck in a lease and the practice is stuck in a lease for the next 3 years. So I know I gave you a couple talking points, but these are, as you know, Jay, situations you're currently dealing with on multiple fronts right now with our clients.
You know, what's very, very interesting is I use the term, what I said is not always what somebody hears. And I say this as a joke, because I said, we'll start at the top and we'll work our way to the bottom. And that's exactly, in my head, what I said. What I didn't realize is we were going to start at the top left and then work our way to the bottom from the right side to the left.
To be fair, I said clockwise. I mean,
it is clockwise. And I'm thinking, wow, we're supposed to be speaking about real estate. So let me make one final comment about capital equipment, because it is valuable. Capital equipment has value about what the revenue that it can generate. All right. But every practice has a graveyard. And I laugh about it because I'm not here to ever knock the vendors. Understand that's how vendors and salespeople make their money. But when they come in and they try and sell you and give you the Excel spreadsheet on the ROI, that if you do X amount of treatments times X amount of dollars per treatment, this is the revenue that you will generate. So the valuation and evaluation, as you can pay the machine off in X amount of months, be careful how you buy it. This is a whole totally different lecture that we do all about negotiation and when is the right time to buy equipment. Because at the end of the day, you have to have that patient base in order to perform those treatments. So what comes first, the chicken or the egg? I always say I want the patients first to generate the traffic versus buying the equipment, because we've had clients that have bought equipment and then have nobody to treat because they're just starting their practice. Real estate. When you're evaluating a practice and you're going to buy it, I always want to know, does the person you're buying it from own the property? Now, in my former practice, we had several business units within the business unit. Example, we owned the real estate in all 3 offices. So we had a real estate management company, which was us, just a different name, that rented to the dermatology practice. It rented to the med spa, and it rented to the surgery center. Each one paid rent to the landlord. Now, each one of our business units was a separate entity. You can have wholly owned subsidiaries of the mother corporation if you want. The purpose of that is that each individual business unit had its own P&L. Mm-hmm. Is it an accounting nightmare? Yes, it is. But when you want to sell a business unit, it's not. Because each unit comes with its own set of expenses, its own set of revenues, and yes, you will share. You will share revenues and you will share expenses by the amount of rent that you're paying and some common expenses and some common staff. And you could do journal voucher entries if you're if you're good at accounting. But the real estate valuation, for a second, Mara, is what is the lease that I'm going to assume and or acquire? What's the balance of the lease? Are there options? Because I don't want to come in and buy Mara's Med Spa to know that I'm on the balance of a 6-month end of a lease. And you know what? The terms of the lease and the conditions, may not have been assumable. You couldn't sublet it. And I have no idea whether or not the person who owns the property is going to want to sell it. And now I have to move out, and all of the tenant and improvement build out that you're telling me you've done and bought and paid for has this much value. Let me make sure you can see what this really is. It's 0.
Goose egg. Goose egg.
Because things that are built in, you have to leave. Now, if you have 5-year and 10-year rent, all right, what's the escalation clauses in those leases? Now, I negotiate leases.
Well, not only that, Jay, we've run into issues where the lease was the lease that still had 3 to 5 years left, but the space was so much more than the buyer wanted. And the price of rent every month was so much higher than the potential buyer was able to afford, that ultimately that was a huge deal breaker, unfortunately, because and the landlord was not willing to let anyone out of the lease should there be a new buyer. And so they had to put the kibosh on it at that point.
And also be very careful, because depending upon how you finance the purchase of your practice, whether it's self-financed from the seller or you're going through a third party like a bank, a true lender, they're going to want to put their thumb on the assets. They'll have UCC filings. However, for personal guarantees, the lease landlord may also want to put their thumb on the assets. We've just gone through this, and we're going through one right now as we speak. So we had to determine, because the bank wanted the landlord to sign a waiver that the bank stood in line first to assume all the capital equipment in the event of a default. And the landlord said no, because if 10 leaves, then we can put our thumb on all the equipment. So who's going to stand in line first? The internal revenue usually stands in line first, but I
One,
mentioned
yeah. And one thing I was going to recommend too is that if you are, which we've seen several of, quite honestly, in the past few weeks, is that practices that have multiple components to their practice, i.e., it might be you have an insurance-based derm, and you have a med spa. You might have vascular and med spa. You might have, there's almost always a med spa component, to be completely honest, with almost everybody, that just because the nature of who our clients are. You could have surgical and non-surgical. And if you are looking to split those two entities apart, one thing you do need to consider is, how are those entities currently broken up as far as bank accounts? How are they currently broken up as far as, are they broken up via real estate? Do you have surgical in one suite, non-surgical in another? So do they have separate leases or the same lease? Do they have the same website? And therefore websites are much more difficult to break up when it comes to traffic. And so if you separate it out, you're going to lose traffic. I mean, there's all these different components. So thinking of, are you looking to sell or buy part of a practice versus an entire practice? So it's almost a little more difficult to separate it out. It's not impossible. But when you are the seller, you want to make sure you are keeping that in mind so that you are able to separate things much easier. Definitely not impossible. It's just
if
making sure you have the
you
analytics available.
if you are representing, if we represent the buyer,
Mm-hmm.
I ask those questions, all right, that the seller should already have prepared. Because if we represent the seller, I put everything in place and question, I already have the answers that I, representing the buyer, would ask. Because
Well,
I
yeah.
want to look at the negative side of every positive situation.
And Jay, this actually leads us really well into one of the final questions we have, which is, the valuation should be conducted by a third party, right? And so you want it to be a reputable third party. You want to have that reputable third party be somebody that is not, they have a good name in the industry. And there's many of us out there. Obviously, we do this. There's other people that do it. We often recommend you want to have a different person representing the buyer and the seller to avoid any sort of conflict of interest. But you want to make sure that you are properly represented, because you, chances are, have done this. This might be your first time buying or selling. I would say some people, they've done it maybe 2 or 3 times, if that. So if that's something that they love to do, which is buy and sell. Most people, though, this is their first time. Versus, you want to work with somebody that knows exactly what to look for. And also, another thing you want to look for is somebody that plays well with others. One of the questions that we got, which is, what players do you suggest having on the team when you're looking for a valuation and when you're looking to buy, sell, or bring in a partnership? And with that, you want to make sure you have an accountant, a bookkeeper that's able to pull those really strong numbers for the person doing the evaluation. We always say garbage in, garbage out. So you want to make sure you have somebody that's putting great data, truthful, detailed data in. You want to make sure you have somebody that's able to pull that truthful data out. You do want to have an attorney on your side when it comes time. You want to keep in mind that at a certain point, it may very well make sense, and you may need to bring in somebody on the real estate side, because Jay, you always talk about how a practice is considered a tangible asset. And so you may need to bring in, especially if there's real estate involved, but you may need to look at bringing in somebody on the real estate side, somebody that's done this before. And honestly, bring in a consultant that's able to help you through this. So you want to make sure that you have those particular players on your team. I also say that you may not want to tell everybody in your practice, but have somebody in the practice that is able to help you pull that data, so that you as the doctor aren't trying to pull all this data that you may not necessarily know how to pull, because you may not do this all the time. So you want to make sure you have that in place.
Yeah, let me, in the couple minutes we have left,
Yes.
let me put it in the proper order.
Mm-hmm.
When you want to do this, I really recommend that you bring in a consultant. And this is not a sales pitch, but it is. I recommend you bring in a consultant that specializes in operational, administrative, financial guidance of your wheelhouse. We don't deal outside of the aesthetic, cosmetic, plastic surgery, med spa wheelhouse because we know the ins and outs of it.
Right.
And you want a consultant that's going to be able to ask the right questions. Now, Mara brought up the point. You need an amazing bookkeeper or accountant because that's where all the good, solid numbers from. That's the evaluation I have to do when I'm looking at P&Ls and spreadsheets for procedures and revenue expense to ratio to give me my profit. So there. And then you want to have an attorney. So it's the consultant who deals with the accountant and an attorney. Why? Because the attorney is going to memorialize it in writing. Why? Because in case it ever needs to be litigated, you want to have your I's dotted, your T's crossed. What Mara brought up about real estate, your attorney, if it's non-real estate, can actually act as the broker. All right. We are business management. We are not a broker. So we're not going to serve on the transactional side of the deal. We're going to manage you in the process of getting the deal completed, evaluated, valuated. All right. Because you need, if it's a tangible asset, you want to get a legal appraiser, then you need an appraiser. If you want to do it through a broker, then you need a broker. But brokers may not be experienced in your particular field. So get somebody that's experienced in your field.
So Jay, a couple last minute things I want to make sure we're covering that some people had asked, when is the right time to get a valuation on the practice? And I would say if you have an inkling that you are going to sell in the next 1 to 3 years, you want to get a valuation now so that we are able to get that, number one, get the baseline. If you're ready to sell, like you're ready to go now, then you're going to need that as the actual valuation. But if you say, I'm probably going to want to sell in the next 1 to 3 years, for example, then you want to get the valuation now, as long as an evaluation, which will tell you what are those opportunities for improvement. So do you need to boost website traffic because you want to make sure that not only is your website a lead generating source, but you want to make sure that you're able to focus on closing more leads and therefore get more patients, therefore make more money, and therefore your practice is worth more. So you want both evaluation to give you a baseline and an evaluation to tell you what to do.
Because
and
medicine
is a business.
There you go. It all comes full circle now, doesn't it?
All comes back. And so, but truly, when you then are ready to give somebody, to put a price tag on, on that for sale sign, you're ready to actually do your thing and sell, you're going to need a current valuation. So you then can't say, if you were ready to sell today, for example, and you said, well, I got a valuation in October of 2019, the buyer would laugh and walk away, right? Because look at how much has changed. Look at how much has changed in the past 8 months. And there's just so many things we've seen where illnesses have taken place. We've seen all different things. So staff changes, COVID, et cetera. So you want to make sure you're keeping those things in mind. Finally, so I think we covered that. I just want to make sure we covered those points. With that, I would love for us to open it up. I think one of the final questions, Jay, was specifics regarding a partner. Jay, or Chad, do you want to bring up that question that we were getting?
Yeah, so the question was really, when you're bringing on a partner, how does this impact things? The particular group said, we're a group practice with a single owner, but there's interest in shared ownership and options for buy-ins. So how do they need to really approach what they're doing? And what should they be looking at?
Well,
Jay, I'll let you grab this one.
Yeah, the first thing, let's come off of that slide and we'll speak one-to-one.
Sure.
First thing you need to do is put a price tag on what the valuation of the practice is, and then how much of a percentage are you willing to offer out? Because understand something, if you have multiple people who are in the partnership, multiple people at 20%, if there's 4 people, 3 people at 20% and me at 40% can outrule me. All right. So you have to be careful. What is it you're giving away? Now, there's a difference between stock ownership and financial ownership. Financial ownership means you benefit in the profitability and or losses, upon the percentage. The stock ownership means I own a percentage of the actual business. And what we didn't talk about was an asset purchase, or a stock sale. And if anybody is interested, please, contact us and we can discuss that. Because with a stock purchase, you're buying all of the things that are hiding underneath the carpets, the liabilities, whereas an asset purchase agreement, all you're purchasing are the assets. So you want to set down the terms and conditions. Number one, what is the percentage you're willing to sell? What are the financing terms in which you're willing to sell it? In other words, is it sweat equity, meaning you will gain percentages over time, or you get 10% a year up till a certain amount? But if you want to stay in the business, I would always say make it sure that you maintain 51% until you really don't want to be that decision maker anymore. Because a lot of people say to me, I want to come in, I don't want to be the business person anymore. Or I want to sell and I really don't want to run the business, but I still want to perform and hone my skills. So there's so many different things. How much do you want to give up and how much do you want for it?
Great points. Yeah, and I know we're kind of out of time, but I think that's a great point. Is really, because I see it all the time, right? Someone brings in a partner, but a lot of times they'll start out as kind of an associate, right? And let them kind of let's date. Let's date before we get married, type of thing. But during that process, they've already determined what the valuation is, so they say, hey, look. You get these certain criteria and we decide that it works, then here's what it is, and kind of the strike price and allow that to happen. But you bring up some great points of control. And control is so critical.
Yeah, I do want to bring up one point that in the valuation of future ownership or current to future ownership, if you do the evaluation today, and you're speaking about bringing on one of your associates contractually that leads to partnership, what's very important, is it an option or is it a partnership like a lease purchase or a lease with an option? Because if I evaluate my practice at $5 million today and it's worth $7.5 million in a couple of years from now, what is the person buying in at, 5 or 7.5? Or is it 500,000 or $1 million? The numbers are insignificant at this point, or conversely to that, what the value of the business was a year ago may not be what the value of the business is today. And the potential buyer signed the agreement at $1 million. And with COVID, it's only worth 750. So you have to put that and memorialize that in writing, what the valuation is contingent upon, today's market or the market a year, 2, 3 out. And you need somebody like us as a consultant that can help you memorialize that with those terms and conditions.
Absolutely. And one of the things that I heard from both of you, which I hope the audience takes away from this is even if you're thinking about it in the future, it's worthwhile going through the evaluation today, right? Of understanding where are our blind spots? Where could we be improving to make our business more valuable? Where are some of these expenses that are just like, maybe that should or shouldn't be there, right? Or more importantly, and this is one of the things I heard from you is if you're going to determine and really get into the lifetime value of your patients, which is critical, and you can really build and boost your business, what are you implementing today on a systems basis within the practice and with software that are actually going to increase your revenue and bottom line? And these are some of the things that you do so well. And so for anyone listening today, listen, are you going to pay someone a little bit to help you, value and sell your practice? Yes. But let me tell you what you're going to get out of it by hiring some experts like Shorr Solutions is so worth it, because I promise you, you will not get the full value out trying to do it on your own. There are things that you will miss. But when you hire someone who has done it over and over and over again, it's going to be there. When you hire an advice media to work with you, and you're working with experts that are going to make you more valuable, at the end of the day, it allows you to you spend a little bit now, you're going to make a lot more down the road. So
Yeah, I'd like to make one closing comment on
please.
that, because when you're doing that valuation, I cannot tell you how many deals that we have negated. We were hired by the buyer. In the days where we used to be able to go out to the locations, we went out to the locations, we did it, we evaluated everything, we said, this is not worth what they're asking. So the buyer, prospective buyer, may have spent $5,000 or $10,000 trying to get a valuation, but they saved themselves $300,000 to $500,000 because they seriously were going to buy it. And on our recommendation, the seller didn't want to come down by a couple $100,000. And there have been other cases where we've actually reduced the sale price by a couple $100,000 to make it affordable, because you start high and you settle low. All right. But I'd like to put a shout out and a thank you to Advice Media, who have referred clients to us on the buy and sell side. And a shout out to Michael Bird and Brad Adato from Bird Adato and Allison Avila from Gordon Rees Scully Mansucani, who we work with from the attorney side to memorialize and make these deals happen or not happen. And it's best that you spend money if the deal's not going to be right. It's the best investment you've made not to lose more money.
And I encourage you, like I said before, is, reach out. I'm going to put our info up just so everybody has it. Reach out to us, to Jay and I, follow us on social, listen to our other webinars, we have Shorr Solutions, the podcast, of which both Jay was a guest, Chad was a guest. So if you like that, but honestly, reach out if you are looking for opportunities, not just to us, but reach out to Advice Media as well. Like I said, there's so many opportunities that we often see that are missed when it comes on the website side. So reach out to, if you're a current client, reach out to your team and ask, can we do a run through? What are the opportunities for improvement? Do you have a site that's 5 years old and needs some zhuzhing up? Are you needing to increase your SEO at this point? Is it time to put a pay-per-click campaign? Do you have an online chat? I mean, these are things that the longer you're in business, that there's just newer things that come out all the time. And so sometimes it's good to have not just a, how is the site performing conversation, although you want that too, but have a brutally honest conversation of how can I generate more leads based on this, right? Based on my goal is going to be to sell. And so I need to transition from being, surgery and non-surgical. I may need to split off the website's Advice Media. And this is why I need to stop, putting an emphasis on ranking for my name and make it so I do that. And this is why, right? So, thank you, Chad, so much for having us. We're passionate. We're all passionate. So thank you so much.
Thank you, Jane Mara. Thank you so much. And I wish everybody all the best, with everything that's been going on this year. Again, I've been in bed for the past 10 days with it, so I get it. And I hope everyone stays healthy and well this holiday season. Thank you so much for your message today, and truly wish everybody the best, particularly as we go into this 2021 year. I think we have a lot of reason to hope, with a good, strong economy, vaccine on the horizon. I think there's a lot of reasons to look at 2021 as a great year and a great year to rebound from. A year that definitely makes you earn your medal this year. So anyway, thanks to all of you for joining us today. We wish you the best, and we'll talk to you soon. Bye-bye.
Thank you so much. Bye.